Welcome back. Today is lesson 16, all about convergence. So far, we've learned a lot. We looked at our supports, we looked at trend lines, we even looked at all of our most popular patterns, all those types of great things. Individually, they're very easy to find, but what can we do to make it a good setup to a great setup to buy into? We have yet to talk about entry. Right, and that's going to be a whole conversation about waiting for crossovers, waiting for value, whatever you want to look into. That's a later conversation. But every single solitary setup from this point on is going to be built off the idea of convergence. So what do I mean? When we're looking at a ticker and you properly chart the first time, that we always talk about, when you find a ticker you like, you chart it the first time completely through and through the way you're supposed to do it. So you come back to it and you can update things, follow it, you can chart it, all these kinds of great things. To buy into it or even have a chance for an entry point, we're going to need at least two of these three things: support, trend line, or a pattern setup. You should try and get all three of those together. And that's what's known as convergence. When all three of those things converge together, that's what you want to buy into. We're going to briefly talk about the mental background of this and why this works so well and how we can try and rope in as many folks as possible and try and find as many different individuals who see value. But we're going to get in a little early, a day or two early, and then we're going to go in this convergence setup, and it's going to be a really good idea for us. And lastly, we're going to discuss our indicators. Now, we're going to have a whole section dedicated to each one. We have about 4 that we use, right? EMA lines, RSI, stochastic, and vortex right now. And MACD is also a fine one too, right? But we're going to use all 4 of those in tandem with our price action that has convergence. If we can find the indicators matching what the price action says, and it checks out, price action, EMA lines check out, all 3 indicators check out, that's massive convergence. So I have a whole YouTube video on this. I can even link it in the description box below. That way you can at least see what I'm talking about before you really dive into this. But again, a little bit shorter video just because it's such a nice setup. It's very easy to understand, but I want to make sure it's crystal clear to you. So let's check out some examples. So this is BAND band. It's a really nice looking setup. We see volatility. We see off the bat clear support and resistances, maybe a possible trend line. I like it a lot. So what we're going to do is let's do the whole thing the correct way the first time. Let's start with our supports and resistances. We can see we have one down here. And again, is it necessarily the most relevant? Nope, but it's still there. We'll duplicate our line and move up. We can see a perfectly good support area right about here. I want to move up just a tad bit to capture all this movement. Right there. We can then duplicate it again and move up, and so we have a great one right about in this area. Right, I'm going to say probably right about here. Right. Duplicate it again, maybe do 2 more. You don't need to do too many. That's definitely one right there, but just because of the significance up here, right, a bunch of stop and start there, we'll go there, and then all the way up here is certainly relevant. So we have 5 support lines. 3 are definitely in play right now. This one could be moved down. Double checking, it looks pretty good. I'd be remiss not to mention that this was a good support here. I'm going to go with more recent price action more than anything and go there, right? So I could drop it down. I should be aware that I could drop down, but again, this is a fine value nonetheless. Looks good for supports. Let's find our trend lines. Always start at the bottom left, all the way right, and scroll up. So we can see we have one that taps right here, right? But that's only once. So we can, problem solve, and so we have plenty of other ones that were not hit quite yet. So let's move over all the way right and come up and see, oh, much better right here. Looks really good. I'm going to drop it just a little, right? You can come right about here. See, that's probably a good trend line. You can make this into a channel really easily and get all of that, right? Just to double check our work, I'm going to come over here as well and double check and see that, okay, this is probably an even better trend line that actually bounces really well. So I'll use this one, right? Just because I double checked my work, I didn't rush anything. That's good. Redraws a channel right there. Bada boom. Looking really good. So we're going to make that gold as always. That's our channel. So it looks really good right here. Our support can be aligned, and again, what I'm going to do is drop it just a little bit, all right, just a little bit, right about there, and make this also into a channel. Now, this is we want to be super in depth. We now have 2 channels, right? We have our support channel you want to buy into a value, and our trend line value they want to buy into. So now we have 2 channels, right? We have our support horizontal channel, which is our best value given this price action, and we have our ascending trend line channel, which is also right here. So as we can see, they're coming together. What's that known as right here? Well, convergence. So what we're seeing on band is this. Folks are going to see the support area approaching. They know from this earnings play, you can see at the bottom it had earnings. It's crashing down into support. We now know that this is going to be a good value based on a horizontal play, right? From our first lesson of supports, we know that this is a good buy based off that. We check our trend line video and know that the trend line is very obvious. It's hit once, twice, 3 times, and now 4 times in showing life. That's also a great value. When they come together and they meld together this one point, we're going to have buyers who only play supports, right? There's plenty of retail traders who don't do the extra work, right? They buy simply off supports. That's totally fine. They're going to buy in because of the support area and it's showing some life. We then have the group of retail traders who are going to buy off the trend line, right? They like to play off of patterns, right? And so they're going to buy into that trend line. We're going to get in now or in a day or two when it shows some life based off both these coming together. With that being said, is there a possible pattern? Let's check it out. So looking at BAND, we can definitely see a pattern is beginning, right? And here's the beauty of convergence is that we can start over here, right? Draw a line here. We can definitely see, if we're looking at this side of everything, we have a possible horizontal triangle forming, right? It's getting lower highs and kind of forming. We could also very easily say that this is going to be our resistance right here. And this is now going to be an ascending triangle, right? It's kind of coming up looking really, really well. And the best part about this is that we have a great risk versus reward setup. So we have 3 things: trend line, support that's horizontal, and a obvious large scale pattern. What this leads for us is not only a high amount of reward, which is about looking at this one setup, upwards of 25%. But here's the best part is that we now have a game plan we can build off of, and I'm going to show you. So hypothetically speaking, if I want to buy into band right now, we can come over here and we can see that we have convergence happening right here, right? We have all these great things happening. It's looking really good. We can buy in right now, and our first reward point will be somewhere around 8%. That's a good gain, right? If you're a day trader, you can get 8% one day. That's great. Now, this may take you, let's go back and check. This right here, it took about 6 days for 8%. Over here, it took about 7 days for 8%. So it's about 1% a day when it does reverse, right? It take about 8 days, 9 days to get here. But then again, a full move can bar us anywhere from 10 to 20 to 25%. And so we have a very high reward ceiling, right? It looks really good from here. But what's our risk? Well, let's be smart about this. If we were to zoom over, right, we can see looking right here, our supports right here, our trend line bottoms right here. I'd wait for both of these to break, making about 2.4%, right? So risking 2.4, 2.3% for a possible gain of 15 to 20, it's a great setup. When you take all those basics and put them together, the equation should always come out to what's my risk, what's my reward, right? If your reward heavily outweighs your risk, you should be more inclined to take that trade just because you know that if you're going to risk 5% to make 50, or in this case 2.4 to make at least 8, upwards of 15, it's a great setup. You should never, this is a big lesson, I want you to think about this. You should never, ever judge a trade by how much money you can make. Think about it. You should never, ever judge a trade based on how much money you should make. You should always be thinking in percentage signs and risk versus reward. Anytime you go on social media, anytime you go on the news and you see, X, Y, and Z made $500 million off of this trade. Oh my God. Well, how much capital do they start with? That's a big question, right? If I have $1 million and I invest it and I make $40,000, you may be thinking, this guy made $40,000 in one trade. Yeah, but I also risked $1 million, right? So is that really a good return? Right? So I want you thinking risk versus reward and percentages. If someone tells me, hey, I made a trade that made 25%, that's way more impressive to me than a trade that made someone 5% and they invested $100,000, right? So from here on out, everything we're looking for is going to be convergence and risk versus reward. It's as simple as that. And our supports, trend lines, and patterns lead to better risk versus reward. That's where you're going to succeed at. The first lesson I taught you with this whole entire section was our small winners happen more often than our small losers. And then again, our small winners are bigger than our small losers. If we do that, we're going to hit some dingers across the way, hit 67% runners. All those kinds of things will outweigh our losses. That's how you win in trading, right? It's never trying to get that one big $1 million percent move. I've taught you before, 8 day trades or 8 swing trades that equal 10% reinvested doubles your money. What do you want? 8 solid setups at 10% or one 100% move? You tell me. So looking at band one more time, it's an obvious ascending triangle right now. And what the best part is, let's clear out our drawing set. This is what's beautiful about convergence. We know we have a support line right about here, right? And we know that we have a ascending line, a trend line right here, right? Super nice. Here's the best part, and we've talked about this before, of convergence. We have our pattern set. We have a ascending triangle right here. That's going to be our big first play. Let's say this trend line breaks and comes back down. Historically, once, twice, 3 times, 4, 5, 6 times, this support has held. You're going to lose 2.4% holding, right? We're going to wait to buy back in. This particular ticker comes back down to 144. We buy back in. You're going to make 2.4% within maybe $3 of movement, which is not much for the stock. So even if you lose all your percentage right there, that's all you need. Every one of these green candles would have made you your money back, right? And that's the beauty of charting it right the first time. So you may get burned, right? If you do lose out on a ascending triangle or a channel up, there's always support beneath it, right? We've charted correctly. If you lose, you can still buy back in later when it shows life and make your money back and more. All you're getting is a better deal. And that's the beauty of convergence. Let's check out one more. So this is FLNT. It has great volatility. Again, your first thing is, will this make me money, right? If it's very stagnant and you really want to always check your y-axis here of price, you got to make sure there's actually money to be made. We can see big 40% moves. We can see even downtrends of 18%, uptrends over here of 70. We have definite areas to make some money. So let's do this all correct the first time. Let's find some support areas. This is definitely going to be one down here. Is it relevant at the moment? No, but you can always include it. You can always clean it up later. That's totally fine. That's definitely one right there. Moving up, we can see there's one definitely right about here. Moving up, right about there. And we can see that staircase happening, right? These ascending ones definitely have some level of ascension going. This is definitely one. And then we can do probably one more good one. This is definitely one right about here. So that looks really good. I'm going to take this one at the bottom, move it up because it's not really useful, and make a resistance. I think that's going to be our first major resistance right about here. I could also put it, if you're more risk averted, right here. That'll definitely be our first resistance. This is a good strong support, right? I'll put it here right now, right? And that's all it took was some second guessing, some double checking my work. It looks really good. Good support areas. I like it a lot. Is there a trend line? Well, we can definitely see some lower movement. You can come over here, but again, off the bat, you can see it's not going to work out. So let's come over here to our bottom, come all the way right, move up. We can see right there, boop, it tapped really, really nicely. And I think you can make a channel out of this, but let's double check our work. Come over here, right, click here. We can see that's not going to work out nearly as well. And right here, it may line up perfectly, but again, this is a big problem with beginners. I've said it before, I'll say it again as a reminder. It must tap 3 times. Any idiot can connect 2 bottoms, 2 tops, right? And that's what we just did. It may look clear to you because like, oh, it lines up great. It hasn't tapped 3 times. So is that a temporary one? Sure, you can put it there and put a dotted line so you know this may be one that's going to be developing soon, but it must tap 3 times. So this one is not valid. So what you can do if you really want to do this, you can take that, double click it. I would always use gold for trend lines, that's my thing, and make it dotted. So this way I know it's not a good one yet, but it's definitely temporary. This was our best one down here. You can see this lined up really, really well, just like that. So let's get rid of that for now. Come over here, all the way up. You can go off the wick. You can also cut through just a tiny bit and make these all tap. What I'm going to do, because I'm more risk averted, I'm very conservative in that way, do that and make this my channel and get all this move right there. So that to me is a beautiful channel, and we can see it tap down just like this. You can adjust this as you want. I'm going to keep it like this for now. Let's make this our golden channel for buying into. We have a support area right here, what's looking like right over here. So what we're going to do, make this also a buying area, probably right about that. So now we have an area of convergence, and it's ready to go, right? FLNT, we called on my Twitter, looking really good. We called it on my Discord as well. And so we're waiting for it to come back down. It's making some good moves. We'll see what it's going to do here, right? But we're prepared for our next big move. You're going to notice, and this is what we're going to talk about next, is that if we're talking about trend lines need to be present or patterns need to be present, that's not going to happen with horizontal channels. And so you got to start using indicators, right? And a horizontal channel, you're going to be forfeiting the chance to have a really nice trend line for a very strong support / other indicators that are going to show you that this is a good buy-in. So you may not have a channel horizontally that has a trend line that would make any sense, right? But you will possibly have really strong indicators that follow it very, very well. And I'll show you. So this is SILV, SILV. It really reacts well to the metal futures and to silver futures. We can see off the bat, this is definitely a horizontal play. So let's go from the bottom. As always, find our supports. Right here is our first one. Is it relevant? Well, you can see very much so. That's a great sign for us. That's showing some life here. Extend left. Let's make some more supports and resistances. Of course, our first big one is going to be right above it. So we're going to activate this line, come up and see that, okay, right there, looks really good. And that's what's testing right now. We're going to duplicate and go up a little bit more. See, that's one right there. And let's do one more right about here. Right? That's one right there as well. So we have our 4 supports. And again, is there a trend line present? No, there isn't. But we have a really good buy-in area now that the price is actually testing this resistance right here. It's testing it. We're going to wait and see. So we're going to make this our loading zone right here. I would be comfortable buying anywhere in this area. My personal preference, again, it's your risk management policy, buying it right here. Top of the channel down, I'm risking no more than 2 or 3% in buying in here. And again, my profit buying in anywhere in here is going to be 5, 10, 15, 20%. Again, these channels and Convergence set us up for risk versus reward. That's exactly what we're looking for. So where do I go from here? So with a horizontal play, you're going to give up some stuff to gain some extras. What you're going to give up are trend lines, right? You don't have a particular pattern setting up right now. Not currently. The pattern is a horizontal channel. And you may find some stuff in here, where you may find double bottoms. You may find candlestick setups like 3 soldiers. Or you may find some dojis, whatever it is. That's a more complicated setup. So again, if you're a beginner, you may not notice a double bottom forming or triple bottom forming or 3 higher valleys. Those kinds of things will come with time. So you shouldn't be stressing about that. But you're not going to have an obvious trend line. But what do you gain in return? The first thing is that most indicators like RSI, stochastic vortex, are going to follow horizontal movement much easier than ascending or descending action. So you can use your indicators a lot more. That's going to be a really good thing. The second thing you're going to be afforded is the idea again of consolidation. All horizontal movement is consolidation. As the time goes on and the stock stays at that same price range, it's going to be a spring. Click, 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 click. As time goes on, it's going to have smaller and smaller price movement. When that spring really gets tight, that consolidation gets really tight, what's it going to do? Boop, it's going to pop, right? And so you're going to be affording yourself the opportunity for a big move. I did not specify that this is a big move up or a big move down. So you got to make sure you use a stop loss. We always talk about risk management. So with your ascending plays or your descending plays, you're going to be afforded a trend line, which can give you more clear convergence. With a horizontal play, you're going to lose that, but you're going to have a much better time using indicators. I always suggest using indicators regardless, but our RSI, stochastic, and vortex are going to follow horizontal plays a lot easier than ascending plays, and I'll show you. So again, we haven't talked about indicators in depth yet. That's going to be our next big lesson. So what you're going to do is go to studies, and this may work on TradingView or any kind of app that you use. Go to edit studies. We have a whole bunch over here. The first we're going to turn on is RSI. And you're going to click, yep. Don't mess with it. That's all good. Right, that's really good. We're then going to turn on stochastic momentum index. Double click. That's good. And let's go ahead and turn on vortex. Turn that on, and we're good. Bada boom, bada bing. Looks really good to me. EMA lines are going to be added later. We're going to talk about that later on with convergence and a ascending play. But for horizontal plays, they're important, but not as important. I want to focus these 3 types of indicators first. EMA lines can come later. So what do we see? RSI, if you're any kind of beginner, may not know what that means. It's a relative strength index. It's going to show you previous price candles based off of the 14, 70, and 30. Every time the price closes red or green, it takes into consideration and shows based off of price action, is it a good deal or a bad deal based on price action alone. You should never trade off of RSI by itself, but again, it's a great pickup nonetheless if you get good at using it. We can see that when the price is below 30, it's been a great deal, and above 70, it's been a bad deal. So again, you couple price action with this. Let's look at this, right? Let's zoom in a little bit. As the RSI right here, as the price went up, RSI went up. Then the price action dipped, RSI dipped. It went back up. As you can see, it kind of leveled off a little bit. It dipped, came back up, it dipped. So we can see a great mirroring because it's a horizontal play of RSI. And ascending plays and descending plays, it's not going to be as good, right? So just by back testing and saying, okay, historically it looks really good, I'm going to trust the RSI. The next thing you want to look for when it comes to convergence and horizontal plays is you want to couple it and see where it gets low to, right? We can see right when it taps this line, it got to 30, 28. What happened? Well, it went from oversold, it made some moves, it consolidated, to then overbought, right? So we have a good successful move right here from being oversold to overbought. We come back over here, oversold, what happened? Eventually became overbought. Oversold, eventually became overbought. Now this one you need to be careful of because you're oversold, and then you would have actually lost money if you would have held for too long and would have been scared out. But again, you have a good section here, oversold to overbought. And sometimes, like over here, you can trace other price action, see even at, about 33, you made a good move. Over again, at 33, you made a good move. 33, you made a good move. So you may not have to even hit 30, and again, you need to be dynamic as we go through this, but again, it shows relative strength index, and right now we are oversold. So again, we have a history of going from oversold to overbought, oversold to overbought, oversold to overbought. So again, we're right down here, mixed with our price action, that is now convergence. Buy-in channel, oversold. The stochastic is much of the same, and it just shows you that plus some volume in there. Let's double check. It looks like it follows it almost perfectly. It's very mirrored. It's looking really good. And every time you would have bought low, you would have made some money. Bought low, eventually would have made some money. Bought low, would have made some money. So stochastic is very similar. It also can lead to some divergences, which we're going to talk about separately. It's not get too bogged down. But if the stochastic breaks down beneath 40, you would have made money almost every single time, long term. We're down there again. It's a great sign. Vortex, again, is much of the same. And we're going to talk about this later. It's very similar to MACD. It'll have its own section. So Vortex, when the green bottoms out, is when you usually want to pull the trigger and buy into it, right? So every time the green has bottomed out over here, you would have made money. Would have bottomed out, money. Bottomed out, money. Bottomed out, you would have been burned. But again, you would have made money eventually when it crossed over. Bottomed out, made money. Bottomed out, bottomed out, bottomed out. And we are now again bottoming out. So the Vortex, again, is going to be its own section. For now, if all you need to know is when the green gets very low, you're good to go to pull the trigger, and you want to ride it all the way up till it hits its peak, right? It's a really good one for showing momentum as well. So you may not have a trend line on a horizontal play, right? But you can couple your indicators with your price action to show you some really good stuff. We can throw a volume profile in, but again, that's going to be its own section. EMA line should be its own section. I don't want to be overbearing, but again, you need to have patterns, trend lines, supports, indicators. If all 4 or 5 of those things line up really well as a place to buy in, you have convergence. So again, one last time before I show you maybe 1 or 2 more examples, this is a mental idea. This is not always the best reason to pull a trigger, bang, bang. You don't want to always go in based solely off of convergence, but every single entry that you have should always have convergence, right? You don't want to buy off of just one thing. That's what retail trading idiots do. So the whole mental aspect behind this, and again, it's super simple. You have a bunch of traders, and again, if you were to do any kind of research on Facebook, on Snapchat, on TikTok, you would see some folks have one thing that they watch, whether it's an algorithm script, whether it's going to be RSI oversold, whether it's going to be a divergence, whether it's going to be price action, whatever it may be. A lot of people are going to trade off of 1, maybe 2 things. You're going to trade off of 7 or 8, right? So every single time this is going to happen, you're going to have a strong support area that you're going to want to see. 1, you want to see a strong trend line. 2, you want to see a pattern developing. 3, you want to see that it has a good EMA setup, which we'll talk about. 4, from there you want to see RSI, stochastic, and Vortex looking good. And then all of that comes together in one spot, 8. That all comes together for you. You can then decide to pull the trigger. If you can get 6 out of 8 of those, right? If everything looks good, but Vortex is kind of shaky, it's fine. If all those look good, but the EMA lines are both above it, it's okay, right? So every single time before you pull the trigger, right, you must do all your research the first time. It all must line up some way and somehow. And again, the final goal of all this is not to make a lot of dollar sign. That's what idiots do. The whole goal of convergence is to mitigate risk and increase reward, right? You want to have clarity. If you can go in with a written plan saying, I want to make 10% on this trade, the overall goal is 18%, but 10%, I'd be comfortable taking half my profits, having your exit strategy, you're good to go. Again, this all comes down to your edge, your mental output, what you want to do, what you want to trade off of. Take the 5, 6, 7, 8 things that you enjoy most about trading, the most clear-cut things to you, really hammer these things down and be much more successful, right? Always aim for convergence, always aim for risk versus reward. Let's check one more ascending play to show you how the indicators can be applied to that as well. So this is SWN. You can see it has very clear volatility. Again, we've been calling it on Twitter and on our Discord and such. Again, it's been a minute, but we have very clear areas of support, Let's check them out. So let's go with our first one down here. Is this relevant? No, it is not. But again, let's start off at our basics and check it out from there. Our first one, let's duplicate and move up. We can see that that's one. This is definitely one right here. Let's zoom up just a little bit to get all that action. Duplicate, move it up to get more action. That's one. Let's get all of our action right there. Looking really good. Move it up again. See, that's really clear action. Move it up again. That's very clear action. And one more time. That's very clear. And let's kind of get some new ones, right? We can come up here and see that this is very clear. Resistance right here. Resistance, support, support. And let's get one more good one. This was one right here. And then let's take our bottom one. This is not really useful. Move it up to here. So we have, about 8. So we don't need this one right now. This is not useful. This one's not useful. And this one's not very useful, right? But looking right here, looks like it's really, really good. There's a clear trend line that we were playing before. It was right here. Now, that's a bit harsh right there. So we can come over here and try this one right here. We can see this was a very good trend line that we were using and that we were abusing, and now we are waiting on. Let's make it a channel. Looking good. This would be the trend line that we're playing off of in the future, right? We're waiting for this to come back down. I'm sure it may, right? It does a lot of consolidating. It's consolidating. We're waiting for a move back down to our channel. With that being said, we're waiting for this to kind of come down. So we have two options. You can make your support area down here. I'd activate this and move it up and say this is definitely a support area, right? A lot of price action stopped here. Or you can say this one. Seeing as we have more recent price action up here, I will use this as my new buying channel. Do this real quick. So now we're waiting, right? Do we have convergence right now? We do not. But am I planning on seeing some convergence in the future, maybe in about a month? I am. And that's why you're going to be successful. You're planning ahead. Before this may come down. You may see it come down this area. You can readjust this channel to down here. It'll be good to go. Right, so we have our convergence. We have our areas waiting to go. You can see over here, this was going to be a support area, convergence, it took off. Support area, convergence, it took off. And we're waiting for that again. With that being said, let's check the indicators. So our indicators are turned on. What I'm going to want to look for with our indicators, I don't care about anything beyond our uptrend. Everything west of where this trend started is not useful to me. Right? I want to look at everything beyond here. So what I can even do, if you're a beginner, draw a line. There's no rule against this. Draw a line. All the stuff to the left may be useful, but again, I really want to focus on what's happening since our uptrend, right? If you want to start over here, which again, that's a fine channel too. We want to start over here and go up. That's fine. Everything west of this area is worthless. Now you should take it into consideration, right? But you should never focus on this more than our left stuff over here. Looking over here, RSI, let's zoom in. RSI, does it ever get oversold? No, it does not. But does it reverse around the same area? Yes, it does. We can see down here, anywhere from about 31, 32, all the way up to 35. Leaving a cursor there. We can see every single time around 35, it starts to reverse at. So are we going to look for it to go under 30? No, we're not. We're going to look for it to get to around 35. It got to about 35 down here, it reversed. 35 down here, it reversed. 31 to 35, reversed. Over here, has it gotten down to 35 yet? Barely. So we're still waiting on that. So if you want to use convergence off this support area with a 35 RSI, that's not going to be considered convergence. Is it very strong? No, but it's definitely there. Stochastic, does it show the price action? We can see on ascensions and descensions, it's not as good, but it's definitely still very mirroring. See how it does that fairly well? How when the price goes up, it goes up. When the price goes down, stochastic comes down, right? So it looks pretty good. Every time beneath what number would have made money? That's something you need to consider. Is it beneath 43? Because so far it looks like 43 may be the number. So every time it gets beneath 43, around 44, you would have made some money. So again, you can even draw a horizontal line like that. Draw one and be like, all right, I want to be beneath 46. You can even draw on the indicators. That's totally fine. You can be like, all right, I want to be beneath 46. And if it gets beneath there, again, that's a sign of convergence. Vortex, where's it bottom out at? Well, it looks to be bottoming out close to 0.62. It looks like every time at 0.62 and below, you would have made some money. So you can come over here and be like, all right, at 0.62, if it's beneath this, I'm going to be looking for convergence again. So even on ascensions, right, you can use your indicators. Again, we'll talk about EMA lines later, and those are definitely going to be important. But we can see even with this price action, these three indicators, if we get the price into our loading zone here, or both these down here, if our RSI is beneath 35, if our stock is beneath 43, and our vortex beneath 63, we now have convergence. So it's not very complicated. You can always turn on RSI, stochastic, vortex. MACD is totally fine too. There's plenty of options, but again, the usual idea of these indicators that it must be under 30, it must be under this, doesn't calculate and always work out. Not every stock goes negative 30 to plus 70 in RSI very often, right? Some go from 35 to 50 like clockwork, and you would have missed that if you didn't track these things. So again, convergence is what we're looking for. So to review, convergence isn't always the reason to pull the trigger, but every time you pull the trigger, you must have some form of convergence happening. What we're looking for: supports, trend lines, and a pattern on the price action side. From there, we're looking at EMA lines, volume profile eventually, RSI, stochastic, and vortex. Those 8 things are what I go off of. If I see 6 out of 8, even 5 out of 8 sometimes, but 7 or 8 out of 8 of these things adding up to being a reversal, I am very likely to pull the trigger. Again, this whole setup's dedicated to risk versus reward. When you do this correctly, you mitigate your risk because you have extremely clear areas of support, right? If all those things crack down, you get beneath all those things, you sell, right? You're going to buy back in lower, make plenty of money. But again, convergence only leads to better risk and better reward when properly charted the first time. We also discussed how this needs to be brought into your edge. As you develop your mental edge, what are these 8 things, these 9 things, whatever indicators you use, whatever setups you use, whatever patterns you like to use, how does this apply successfully to you making your edge better? It's not about copying my edge. It's about taking what I mentally see on the screen and you taking it and putting it on your screen, right? You may like MACD more. You may not even use EMA lines. You may use SMA lines or MA lines. That's totally fine. What do you use that shows clarity of stopping risk and increasing reward? That's the whole point of convergence. And lastly, we discussed the whole idea is that retail traders and a lot of beginner traders are going to trade off of 1, maybe 2 things, right? You have folks who are like, oh, it's at the 200 EMA line and it's oversold, pull the trigger, right? You're going to see supports, resistances, trend lines, pattern setups, candlestick setups, EMA line setups, volume profile looking pretty good, RSI, vortex, stochastic, 10, 12 things that say yes, buy in. And every single one of those things will have hundreds, if not thousands or millions of traders saying, I want to pull the trigger, but you're going to be in off much more clarity and much more success because you're going to use their psychology, their lack of a mental edge to make money. So there you have it. Again, convergence is just all those great things coming together into a nice net, into a nice safety net for your risk. Super simple to see, but again, you must start charting correctly the first time in charting your indicators and taking your time. Again, it's all about quality, not quantity. With that being said, so next is how we plan our reversals. So far, we talked about all of our technicals being put together. We did ignore our history when it comes to convergence, right? We didn't really discuss how long it takes and all those kinds of things in terms of convergence. So we're going to throw that in our next lesson. And we're also going to throw in, when would I pull a trigger? There's 2 different reasons, right? Value or a crossover, right? That's going to come from our discussion of convergence and are using our history, right? When all those kind of come together, we're going to get into our discussion of risk versus reward, get into a discussion of making realistic goals, and our technical section will be done. And from there, we're going to move on to our indicators, how to scan, a quicker section, but again, a very crucial one to you, and then again, executing on a trade. With that being said, that's lesson 16. Let's move on to lesson 17, talking about pulling the trigger and planning reversals.